Well, if you're a first-time home buyer currently looking for a home, or if you're considering looking for a home soon, or if you're a not, I mean, a experienced home buyer that hasn't purchased a home in quite a few years, this episode is designed specifically for you. Today, my special guest is mortgage banker Keith Hoffman of Draper and Kramer Mortgage. And we're going to share information designed for the home buyer. We're going to share our experiences, our guidance to help you along to make home buying a smooth and stressful and successful transaction and experience. So let's get started. Well, Keith Hoffman, thank you for joining me today. I appreciate you joining me on this conversation. Before we get started on guiding first-time homebuyers, why don't you tell the audience a little bit about yourself?
Well, good morning, Slav. I really appreciate this. My name is Keith Hoffman. I work with Draper and Kramer Mortgage Corp. Been in the mortgage business 33 years, I want to say. Been one of the past owners of the company before we sold it, and looking forward to really getting into this conversation. Appreciate it.
Wow, 30 years. That's some experience. You must have started when you were what, 12?
13, I think. Yeah.
Okay. Well, I think people are in good hands knowing that you've probably seen most situations during your time, as a mortgage lender, correct?
Yeah, it's really been interesting. I got in the business, I think, when interest rates were about 9%. I've seen them fluctuate way down and back up and back and forth. So we've seen a lot of changes in the industry, that's for sure.
Yeah. So, I mean, that's actually a very good perspective. You've seen the ups and downs, things go in cycles. And the way things are now doesn't mean that's the way they're going to be next year or the year after, right? It's always constantly changing depending on what's going on in the economy and the world.
It really is. It changes drastically sometimes. It always goes up faster than it goes down. So I've seen buyers that are concerned about it and they see interest rates starting to go down. And when they do, they're like, oh no, we're going to wait. We're going to wait to lock it. And there is no good time to say, get that crystal ball out. It's really something that we have to look at and keep an eye on all the time. Yeah.
Good point. The one thing is important right now, I think, in today's real estate market, the way it's moving is for home buyers to have all their ducks in a row before they even head out to look at that first house. Things are a little bit different than they were several years ago. And we assume that everybody knows and sees what we do, right? The bidding wars, the interest rate fluctuations. However, we have to keep in mind that, we, on top of all of these news updates in the real estate market, because that's our business. However, home buyers may not, especially if they're fresh into looking or interested in looking and buying a home, they might not know that, number one, we're seeing bidding wars. Number two, interest rates are where they are, or even that they were much lower, a year and a half ago. So it's our job as professionals to educate them in, the current situation and what, we're foreseeing in the future, right?
Yeah. And, preparation, I think, is the real key to everything when you're looking for a home. I've had borrowers call me and say, I found a house and I really need to get pre-approved and they want to put an offer in today. And that's not really when they need to do it. They need to prepare ahead of time. They need to know what to do. A lot of times we run their credit ahead of time because, some of them have issues that need to be addressed. And so what we look at is that, if you have some issues that need to be taken care of, I'm going to identify them and actually go through that with them so they can fix those before they can actually go and purchase a home.
Yeah, that's great information. And, on that topic, sometimes I'll meet with first-time home buyers for the first time, and we're going through the list of what's important to them in a home and so forth. And of course, we're going to talk about what is their comfort range in as far as price wise of a home, and whether they have talked to a lender like yourself yet. And sometimes what I'll get is, well, we know we're good for, let's say, 400,000. We were on Zillow. We ran the mortgage calculators on it based on the interest rates. And it shows that we're okay with that. Now, what I try to explain to them is what you see as a advertised rates, right? It may not be what you're going to get because there's a lot of factors
Yeah.
involved in qualifying for a mortgage and qualifying for a certain interest rate, isn't there?
Yeah, everybody thinks that they can get whatever that rate is. There's adjustments that are based on everything. Fannie Mae and Freddie Mac have made these adjustments. So when I look at your credit and I look at how much you're going to put down and I looked at your debt to income ratios, we need to see those in order to see exactly what the adjustments are. So for instance, if you bought a home and you put 5% down and you have low credit scores, well, you're going to be paying a higher interest rate because the adjustments are made to that raw score that you see.
Hmm.
Raw score, but the raw rate that you see. So it's very variable. Sometimes I did a loan when interest rates were about 6%, 6.25%, and I was able to get somebody about a 5.25% interest rate because they were putting a large amount down and they had high scores.
Sure. And while we're talking about credit scores, I'm going to add this slide here. Talk about a little bit about what makes up the credit score for home buyers or any kind of consumer.
Well, yeah. So, so what we're looking at here is the 5 different things that make up your credit scores. The first is your payment history. So, 35% of your credit scores are based on your history, whether you're making your payments on time, whether you're late. That will affect your credit scores. Your credit usage, 30% of that. And basically, what they look at is if you have a credit card with, let's say, $1,000 worth of a limit, well, you want to be 50% or less than that, because it will adjust your scores based on the usage that you have. So
Mhm.
if you're maxed out with credit, it's not going to be a really good situation. Your credit scores will go lower. Length of time since your credit line has been opened. A lot of people think that maybe I should close my account because I don't use it. Well, not necessarily. If you have good credit, you can put one thing on it every month or 2 months and pay it off. And the longer you have good credit, the better your scores are. Number of credit cards is 10%. They look at how much your lifestyle income is versus your lifestyle spending habits. And those are the things that they look at as far as that goes. And inquiries. So this is really important. You don't want to have a lot of people run your credit if you don't need it. What happens is 10% of your credit scores are based on your inquiries. So if you go to the store at Kohl's and they say, Christmas time, we're going to give you a 10% off because we're going to give, if you open a credit card, well, they run your credit. So those are the kind of things that you have to be very leery of. When you go out to buy a car, the same thing. They're going to run your credit. Well, if they're going to shoot it off to 5 or 6 different banks or institutions that have lending, you're going to be getting lower scores. Now they're temporary. They're not going to be forever. But it's really important that you do that. The other thing I want to mention is that if you want to get your credit, you can get it free from the credit bureaus. Um, uh, you know, it's real easy to do. You don't have to get your credit scores. That's not the important thing. You always want to go to the credit bureaus. You can do that once a year, and you can get it free. And there's 3 bureaus out there, so you can do one every quarter and see what your credit is in case somebody opens something or you've got some issues that need to be taken care of.
Yeah, great. And, it's a great way to see if you have any discrepancies on that credit report that you could take care of, right, to
Right.
increase your credit score. A very interesting thing about those inquiries. So, sure, like you go to Kohl's, they say, hey, you could get 10% off, apply for a credit card. Wow. So you save a few dollars on that
Mhm.
purchase. But if you stack up some of these inquiries, they're going to may cost you thousands of dollars over the life of your loan. So yes, be very careful with that. Now, I'm sure in reviewing a lot of potential buyers' credit scores, you've seen certain things come up. What is one piece of advice to, as quickly as possible, increase somebody's credit score? What kind of steps can they take to do that?
Well, one of the things that they can do is they can look at their utilization. What do they owe versus what the balance is? I'm sorry, the balance versus what their limit is. You want to try to get that down as far as possible. The other thing is obviously don't have people run your credit if you don't need to. Those are really the key things to do that. And the one thing that I will tell you is that credit bureaus sell your information until you tell them they can't sell it. So you can go out to optoutprescreen.com. You can opt out for them to sell your information for 5 years. And you can do this every 5 years. So therefore, you're not going to get junk mail. And one of the things that I'll mention is that when you go to a mortgage company or a bank and they run your credit, all of a sudden it's hit. And so banks or institutions who want to buy your information will look at scores and income and so forth like that. And so all of a sudden you're going to start getting inquiries by mail or maybe even phone calls. So I'm going to suggest that before you even start the process, you go out to optoutprescreen.com and opt out for them to sell your information so that when you go to the banks and institutions and mortgage companies like myself, you won't have that issue of any problems later on.
Yeah, great information. That explains a lot of the junk mail of all, them soliciting new credit cards,
Exactly.
refinancing, and everything else, right?
Exactly.
Save you a peace of mind and some paper as well.
Mhm.
So one of the things that we're seeing right now still are the bidding wars. Even though interest rates are higher than they were a year and a half ago, they're over 6. The amount of available homes has decreased dramatically to the point that there's still many more buyers out there than homes available. Now, one of the things that working with first-time home buyers, especially if they're younger, and a lot of times they get their parents involved, which is great. I love going viewing
Mhm.
homes with my clients and their families. But the mindset of maybe 5, 6 years ago was never pay list price, right? And that's what they tell their kids. And, the
Yeah.
kids trust their parents, and the parents aren't trying to misguide them or mislead them, but was their experience. However, today that has changed quite a bit where not only are homes selling for list price, but over list price. For example, I have buyers currently, even with cash, that they're putting, offering 50,000 more than list, and they're still not getting the home. And that is the environment that we're in right now.
Yeah.
And so as a first-time home buyer, especially if you're getting a mortgage, it is so important to get all of the details ready, because when you find that house that you want, that is not the time to start trying to figure out if you qualify for a mortgage and how much you qualify, right? So why don't you take a moment to talk a little bit about what's involved in getting qualified for a mortgage? What kind of documents are you looking for from home buyers?
This is really important. Getting your paperwork together before you even get started is extremely important. It's probably one of the most important things that you can do. So, um, some of the things that we look for W-2s and tax returns for the last 2 years. And before I even get into this, when we run it through the automated system for Fannie Mae or Freddie Mac, and we have or even an FHA mortgage, it's going to tell us what documents you need. But I can tell you that these are the critical ones that are going to determine your qualifying. The other thing is 30 days of pay stubs, and we want consecutive pay stubs. We don't want one from August and then one from September. We want consecutive because we need to see that income for 30 days. The last 2 months bank statements are extremely important. We need to see you're verifying the amount of money that you have, and we need that all pages. Some people just say, well, okay, here's my balance, or here's my first 2 pages. They don't want me to have the information. Well, the fact is we need the entire thing, and that would include if you have a retirement account or a stock account, things like that. A letter of acceptance for a new position. So let's say you're going to go to a new company and you've accepted the position, but you haven't started yet. Well, we're going to need that because it's going to determine what your salary is, what your start date is, what you're doing. And then we'll be able to use that income. And then, of course, hopefully you don't have a bankruptcy or a divorce papers. But if you have had a bankruptcy or a divorce, we definitely need that because that is part of what your liabilities are. It's going to determine what is on your credit report. And then also, if you're divorced, what things you have, as far as liability. So those are the important things you really need to prepare to get those together. All lenders need it. And, I think that's probably one of the most important things because when you prepare for this, you really need the documentations. One of the things that we have is we have an app. So when you actually do this, what happened? Oh, there we go. When we actually do this, I'll send out the app to you, and you can actually upload all these documents into there. So it's very secure. Let's just say you have all three or 3 out of 4, you still can upload those and then get the other things to us. So when we qualify you, we really want to make sure that you're qualified and I can see your income versus, something else that, may or may not be there. The biggest thing is if you're self-employed, self-employed people, whether they own a company or not, there's certain things that we need. So without getting into that, self-employed, it's a very important thing to have the 2 years tax returns.
Absolutely. So a question just came in about starting new employment. Do they have to work at the new job for a certain amount of time before they qualify for a loan, or how does that work? How will that affect them?
Yeah, no, they don't. So we're going to look at a 2-year history. So if you went from one job to another, as long as you're not on probation, that should be fine. We'll use your new income, and hopefully you're going to be salaried. So, you don't have to be in the same line of business. You can go from one to another as long as you're employed. That should work. Yeah.
Wonderful. Great information. So I got a question for you. So with the interest rates rising, right, more than double of what they were a couple years ago, we have lost some buyers because they were just priced out, and
Yeah.
we're seeing that some buyers need a little extra help, maybe with that down payment in order to still qualify for a home. Talk about the programs for first-time home buyers right now that are out there for them.
Well, IDA, Illinois Housing Development Authority, has some great programs, and each state has their own program. So it's not, it's not unique to Illinois. This is going to be their programs. They have 3 of them right now, and the state allows them to have a certain amount of money that's there, and until that program has used all that money, you're okay to use it. This is my favorite, the forgivable. They'll give you 4% of your purchase price up to $6,000. And you can use that towards down payment. You can use that towards closing cost. So it really doesn't matter what you're going to use it for. They have it on 30-year fixed mortgages or adjustable rate mortgages. And honestly, right now, adjustable mortgages are not even in the picture. It's upside down as far as the numbers go. So, it used to be where you could say, oh, I'm going to get an adjustable mortgage. It's going to be lower than the 30-year fixed. That's not necessarily the case. But you can use this with FHA or VA. You can do a USDA loan. There's a number of loans that you can use it with, and it is available for first-time buyers or home buyers that already have a home. Now, you can't do 2 IDAs in a row. You can't own 2 homes, and say, okay, well, I'm living here and then I'm going to go buy another one. But this is great. This is a great program for buyers that need some assistance. And like I said, they have 3 programs. And this is the most important for me. The next is the repayable. The repayable is that you can get 10% up to 10,000. I think it's $10,000. Yes, it is 10,000. My eyes are not so great early in the morning light. But anyway, it's an assisted program. They give it to you interest free, and you repay it monthly over a 10-year period. So it might be $41.77 or whatever it is. they're going to add that to your mortgage payment and you'll be able to use it. Repayable is a great thing. The third is the deferred, where you're actually deferring it to the end of the mortgage. So when you sell your home, you're able then to use this interest-free until you sell your house, and then you're going to repay it back. And that's a great program too. And again, it'll be up to $7,500 or 5% of the purchase price. So those are the really good programs that we have. And Fannie Mae and Freddie Mac underwrite, like we underwrite to their guidelines, or FHA or BA. And so Fannie Mae and Freddie Mac allow you to put 3% down, which is a great thing. So we can use that in conjunction with this Illinois Housing Development Authority. And it really gives you an opportunity to buy as long as you qualify and as long as you're comfortable with the payment. You and I have spoke a number of times, and I think what you find is that people can afford more than what they want to afford, but yet their comfort level is not where they need to be. So that's really the most important thing. But with these programs, I think you will benefit as a first-time home buyer greatly.
Yeah, and great information. We'll share all your contact information at the end so people can contact you to
Sure.
see if they qualify for any of these programs. Yeah, exactly. People will qualify more than what they're comfortable paying. And I always have conversations with my clients. Don't stress yourself out and maximize what your monthly payment, because once the excitement of that first maybe 9 months of owning that new home wears out, you have to deal with day-to-day living, and you don't want to just lock yourself in a house and not be able to continue the type of lifestyle that you want, right? Or to save
Yeah.
money for the future in case something happens, or other plans that you have. You want to keep that comfort level so that owning a home
Yeah.
is a very enjoyable process
Yeah.
of creating wonderful memories and so forth. So definitely, be very smart and really take a look at your finances. Talk to your lender like Keith as far as what your monthly payment will be. He'll look at your taxes, your interest rates, how much you're putting down, and he'll give you the scenario of, this is what your monthly payment is going to be, and then you can decide whether that is within your comfort level.
Yeah. The one thing that I found is that whenever I sit with a customer, I always, basically there's two things that I run with. One is, are they comfortable with the payment? And that to me is really important. One of the other things is they need to take a list. And I know that you do this with them, as an expert real estate agent, is that they'll go through and I say, get a piece of paper and draw a line down the middle and put your wants on one side and your needs on the other. And when you start with the needs, you're actually going to say, well, I need this, I need this, I need this. And so when they go with you to look for their home, they're actually looking for the home that they need, not necessarily what they want, because they're not going to be in that home for maybe 5 to 7 years, maybe. And then they're going to go to another home. So when you're looking at a first time buyer, that to me, it's really important. I think the
Yeah.
other thing, oh, go ahead.
No, so and that's perfect, because that's process that I start with my clients. Now, the important thing I tell them is, this is your first home. You're looking at photos. You're thinking about expectations. So these wants and needs, it's a great starting point, right? Because there's so many different types of houses
Yeah.
out there to choose from, but we want to start somewhere. And I let them know that what they find is the more homes they see, though, that list changes, and that's okay. I want to make sure they understand that they're not locked to this list, because once they go inside the house and they're like, oh, well, actually, 3 bedrooms is okay. We thought we wanted 4, but there's great space here in this part of the house that has an office space. Or we thought we wanted a split level, or we thought we wanted a ranch or a 2-story, and we're finding all these other styles that we absolutely love. So those wants and needs will get adjusted as we see more homes, and the more homes we see, the buyers get a better sense of what works for them and what doesn't, because they have something to compare to. Because before that, it's just what's in their mind, what they see online as far as photos, and their expectations. So that's perfect advice. It's a great place to start. And then, we just know that we make the adjustments as we go along.
Yeah, one of the things that I look at too is, and you find this very, very common right now because of the price points of the homes and people overbidding and so forth. The demand is a lot more than what's out there as far as inventory. But when they sit down and look at this, everybody worries about, oh my gosh, I can't spend this much more for the home because it's not worth it. And what I found is that, you know, interest rates are going to fluctuate, but as long as they can make their payment, the property value is going to go up. Now, it's not going to go up 15 or 20% a year like it had, but it's still going to go up 3 or 5, maybe 7% a year. And the value of their home is still going to be there. So as long as they're comfortable with that payment, and they really need to look at how to get their payments to be their comfort level. One of the things that I do is I look at it and I said, well, when you have a home, you're going to have a tax deduction that you don't have now. You're paying interest on the home, and you're also getting the deduction aside from that from the taxes you're paying for your home. So when you look at that, there's a way and a formula that we can use to say, you know what, you can go from one payment up $100 or $150 based on the things that I can tell you, based on the value of the home, and also with the tax returns, because you're going to get a big deduction. So for instance, if you're going to do this and you're paying, let's say you're getting a $500 back. Well, if you had the same deduction with the taxes and the interest you're paying, you might be getting back $4,000. So you can adjust your deductions at work based on that. And of course, I would sit there and talk about it, because you can't really just say, hey, I'm going to do this. You need to talk to the lender to exactly, what to do and when to do it. You don't want to do it until after you buy your home, because, you're cheating yourself out of that money earlier, and you're not going to get as much back. So there's things that we can look at, as lenders to help them out.
Yeah, fantastic. And on that point, historically, you look at the home values over the last 20 years, and there are ups and downs along the way. However, if you look from 20 years ago to today, that line moves up. Our house, for example, we bought our home in 1998. Of course, we had that real estate crash in 2008. But today, our home dropped in value at that time, but it's regained that plus more since then. So real estate is a solid investment. That being said, I caution some of my buyers when they're in a bidding war and bidding over list. I ask them, let's be honest here. Is there any chance that you may have to move in the next 2-3 years? Do you see a possibility of a job relocation? Right. Then you want to be careful and not going too high, because then if you do have to move within 2-3 years, you may find yourself losing money in a certain situation. If you're going to be there, for 3-5 more years, it's most likely you're going to be okay.
Yeah, I have a great program that you give me the address, and then I can plug it in. And it's not going to be exact because it's some of the futures, but they've gathered so much information that I can put that in, and we can estimate the value of your home going up, how long you're going to be there, whether it makes sense. So if you're going to transfer something in a year or 2 years, what is that break even point? Because we do look at whether, you're going to pay a real estate agent, you're going to pay taxes, you're going to pay different things. So those are the things that we look at. And it's a fantastic program, and I can do it for anybody, anytime.
Yeah, there's so many great tools available now. For my buyers, if we're looking at possibly putting an offer in a home, I could take a look at a specific neighborhood and see what the home values for that neighborhood were over the last, 5-10 years up until today, to kind of see, what the trends are, to help guide them along, of course, with looking at comparables. That's one of the ways that I help my clients decide what to put an offer in, what's, justifiable. We look at the home that they're interested in, and we'll look back 6 months, similar homes, and compare the finishes, updates, upgrades, and to determine what the value should be in that neighborhood, which is a great starting point in putting an offer. And that's what an appraiser is going to do, right? If they get an offer and you're working towards that mortgage, the appraiser will go out to justify that price for the underwriters, and that's exactly what they do. They look at the comparables going back 6 months. They start where the home is and work their way out.
Yeah, I always constantly go back to the fact that first-time home buyers need to go with professionals that know what they're doing. You know what you're doing. I know what I'm doing. These are the kind of things that people need to look at, because everybody knows somebody. They'll go to work. They'll say, oh, you need to use this real estate agent, or you got to do this. They did a great job. But what I found is that one particular person might have had one situation that's completely different than that first-time home buyer. Or let's just say one person has a lot of debt, the other person doesn't. Those are the kind of things that we need to look at. And so it's really important that we do this. And we talk about our tools. Our tools that we use are unbelievable today. I mean, when I got first into the business 33 years ago, I used a typewriter, handwritten, all these things. It took me like 3 days to get the credit report back versus like a minute now, maybe a minute.
Yeah.
So, these are the things that we have that are much easier. And, people, they'll drive by somebody and they go, I'm going to go look for homes by myself. Well, they can look for homes online all day long, but they can't really find out what the house is worth, what they should pay for it, the neighborhoods, the same thing that you're talking about, Slav. And that's really important for them to really hone in on, is work with that professional before they start looking around. For instance, you and I, we have a combined app. So if somebody wants to look for a home, we can download the app to them. They can go look for homes right on the app, and it goes right to your website. So they're not going to somebody else. They're not losing their focus on things, but yet they can still do all the things that they need to and upload the documents. So when you're looking at something like that, it's very important, the technology in this day and age, to get things in the right perspective,
Yeah. And that's so important. Today's buyers and sellers have so much information accessible for them. And there's certain information that, as much as that's out there, they are restricted to what they can find, right? And that's where professionals, we have a little more accessible to us. This is a great conversation with you today, Keith. One of the most important tips I think I could give home buyers, first-time home buyers today, is number one, get all your ducks in a row, right? Get your financing set first before we go out to take a look at a home, because once you find a home is not the time to find out whether you qualify. Number two is be patient. There are bidding wars out there. You may not get your first one. And don't get too caught up in that whole auction bidding war and end up paying more than you really, want to or comfortable with. That's one thing I talk about before we put an offer in, when we know we're in a multiple offer situation, is you don't have to tell me now, but have a set point where you're going to stop, right? Because what you don't want later on are regrets. The third thing that I tell my clients is, home buying is more of a process of elimination, not selection. So there's not going to be a perfect house there for you. Even I talk to clients that have had new construction built. Once they're in a home, they're like, oh yeah, I wish I would have done this. I wish I would have done that. So the key is to find the home that, checks off the most amount of your checkpoints, right? Your most amounts of your needs and wants. And something to keep in mind is, you're keeping it within what you can afford. Sometimes to get what you want, you may have to go outside that area you're first looking at. So, for example, let's just say your comfort level is under 400,000 and you're looking in Downers Grove. Well, maybe as home prices go up in Downers Grove, you may have to drift a little bit further west if that's okay with you as far as commute wise to get the home you want. So, Keith, what is your biggest takeaway for home buyers? Your biggest piece of advice you could give them from the mortgage standpoint?
Well, there's two things people look at. One is their financial part of this, and the other is emotional. Emotional always takes over until you get to the point where you go, I can't figure out how to pay for this. So the real key is that your preparation is very important, and to sit with your lender, make sure that we know all of the situations that you're in, and disclose that to us, and that way we can help you determine what you're looking for financially on that front. It's very important. The preparation I can't tell you how much the preparation means to everything.
Yeah, especially with the real estate market the way it is today. I think that's one of the biggest keys to a successful and stress-free home purchase.
Yeah.
Keith, again, thank you so much. Is great information from you. How can people get a hold of you?
Well, there's a couple of ways. Obviously, right here you can look at it. My email is keith.hoffman@dkmortgage.com. You can email me anytime. You can give me a call on my cell, 630-306-5626. That's pretty easy. You can text me that way. Feel free to go to my website, dkmortgage.com/Hoffman. There's a lot of tools on there that'll help you. So, and if you want, you can download my app. Just shoot me an email. I'll shoot you the app. You can put that right on your phone or your computer, and you can do everything there, including get in touch with me. So that's probably the easiest way. I appreciate it, Slav.
Oh, my pleasure, and always good talking to you. And I look forward to working with you and our clients in the future. So, Slav Polinsky Homes, you have a great